And I tell you, it's interesting that Aaron talks so much about basis because uh, the basis in the cattle market is does not reflect what we typically see by any stretch of the imagination. And I think many of y'all probably already know that. But I hope we'll kind of demonstrate that here in the first few slides just by looking at some of these calf and feeder cattle prices. Um, and so what we know is the basics that cattle prices are still strong. They've been fairly steady. We have not had any heifer retention up to this point, and we're probably not going to have any until at least this time next year. That's of any quantity to speak of, I should say. Anybody that's in the margin business has a lot of money invested with the hopes of a strong market continuing. So there are positive margins to be had. It's just a much larger investment with no increase in the return on investment. Actually, probably decline on the return in investment. So we still have not, we have yet to break the $2 mark on finished cattle prices. That's not really that surprising, but I don't see any reason for the market to break that price level through the end of the year. There is potential for it probably come April or so, but might still not do it then because we have still put a lot of cattle on feed, and there's still going to be ample supply of cattle coming off of feed in the first quarter and early part of the second quarter of 2025. So with that in mind, knowing that there's going to be plenty of cattle coming off feed, then it may be tough to push past that $2 mark on finished cattle. And that's just, there's always support points and resistance points. And right now, that $2 mark is the resistance point on these slaughter cattle prices on a live basis. And we're going to probably can see that continue. If you just look at this basic graph here, you see the 5-year average where finished cattle prices tend to start going up or increasing in November and December, whereas last year they went down, they declined, and we might see that a similar decline this year, or at least that's what the current market is saying we might do. But bringing it a little closer to home, here's our 5 to 6 weight steer prices. Many of y'all have producers, or if you have cattle yourself, many of y'all marketing this time of year, these freshly weaned calves, and prices are above year-ago levels. They're not as strong as they were back in the summer or the spring, but that's to be expected. So we've seen kind of the normal decline that we would expect in the fall time period, but yet we're still at record prices for this time period. And it's, I guess, something to make note of here is this price up till about September represented L&M 1 and 2 steers. So medium and large, number 1 muscle, number 2 muscle steers. Well, our grading system in Tennessee has more or less begun to mimic what happens in many other states and other regions. And so now we're having more prices on just M&L 1s and then M&L 2s. There is still a category for M&L 1 and 2s based off of selling groups and how many number 1s and number 2s may be in a group and this, that, and the other. But something that is to note here is this now uses, on this back end, the past couple of months, we've been reporting M&L number 1 cattle. And so part of this increase in this price here that you see from October into November is because of just reporting number 1 cattle instead of a conglomerate or of 1s and 2s together. So there is something to be said for that. But anyway, this is a much stronger basis than what we would normally see, because when we look at the futures market in the low 240s to mid 240s, depending on where you are on what contract you're looking at. But these calf prices are much stronger than what we would normally see based off historical data. And so we're probably going to continue to see that because we don't have that many cattle. We've been saying it for a year, and people are like, oh, we keep on having plenty of cattle. Well, it's going to hit the wall sometime, and it's coming quicker now than it was a year ago. Similar 7 to 8 weight steers, still strong values. We had a sold several load lots. Let's see, a week ago or so, and most of those cattle weighing anywhere from 800 to 900 pounds. Mainly hitting 235 to 241, something like that. So still really, really strong prices for these type cattle. Of course, this is the graph shows weekly auction run cattle, whereas what I just stated as a price was load lots. But really good prices, but still a long way from where the futures market would have been calling these prices 6 or 7 months ago. Slaughter cow prices have started to pick up the past few weeks again. I think a lot of that has to do with a lot of people got rid of a lot of cows, and there's not very many cows coming to the market. If you look at the market reports, those slaughter cows have certainly declined in the number or quantity coming to market, and we will most certainly, I feel certain, we'll see slaughter cow prices again next spring. We'll challenge that $1.50. So if you take a 1,200-pound cow, that's $1.50. That's $1,800. But anyway, most people will be getting 1,500 or more, 1,500 plus on a slaughter cow. That does provide a few dollars to put into retaining heifers or developing heifers or purchasing heifers, whichever one your producers may want to do. But they're all options and alternatives. So here is how we know we have not had any heifer retention. Our heifer slaughter is only down 1.5% so far this year. Steer is no change. So it's what's unique about even if we say, well, heifer slaughter is down 1.5%. Well, last year or in 2023, we had extremely high heifer slaughter, extremely high heifer slaughter. So in reality, 2024 heifer slaughter is also extremely high relative to previous years. It's just down relative to 2023. Beef cow slaughter is down 17.5%, and that's what I was just saying. I mean, we moved a lot of cows. We had a lot of producers across the United States that moved a lot of cows when those prices were 130 to 140 on those animals, and they're not there to go into the market now. And they're not going to be back to go into the market. We have to start retaining heifers and developing heifers to breed heifers in order to be able to produce more of these animals that will eventually become slaughter cows. So we'll continue to see beef cow slaughter. We'll see beef cow slaughter decline in 2025. We'll more than likely see heifer slaughter decline the second half of 2025. And of course, steer slaughter will continue to decline just because there's going to be fewer of those animals available. This beef production, even despite slightly lower slaughter, beef production is only down 0.5%. And a lot of that's due to the fact that right now, as of last week's slaughter mix, steers weighed 30 pounds heavier last week than they did the same week a year ago. So you take 30 more pounds of beef and hang it on the rail for each head, and you're killing 500,000 head a week, or and heifer weights were up 20 or so pounds as well. But when you do the math and you're adding anywhere from 20 to 30, it's essentially like adding 20 to 30,000 more head to the slaughter mix in a fell swoop just because we have increased slaughter weights. Pork producers are trying to take advantage of some of their higher prices and competing with high price meats. Broiler production is slowly increasing. I do expect broiler production to at some point really pick up, so that they will pick up some some space in the market if they ever can get some of their production issues figured out, and they'll have a low priced protein relative to both beef and pork. And so there will be some shifting to chicken. Granted, it's not really a good substitute for beef or pork, but in the high priced environment that we're in, with continued high interest rates, inflation that has not really slacked off as much as some would like to say, even if inflation went to zero today, we still have really, really high priced goods, and consumers are looking to where they can cut spending so that they can have more disposable income for their own other luxurious living. Imports have continued to remain above year ago, and we will continue to have imports remain above year ago. When we get into 2025, we'll continue to import lots of beef, lots of lean grinding beef, and we will import and we will import and we will import. It's not going to slow down because we need the beef. We have a strong demand for hamburger meat, and that's what we will continue to do. What is amazing is that exports remain fairly strong despite extremely high prices. It's amazing how strong domestic demand of beef is. It's even more encouraging for the beef industry how strong the export market is. So when we think about how strong the export market is, and that these countries are still willing to pay the highest price to the for U.S. beef around the world. I mean, they're willing to come to the U.S. to purchase beef because it is the most expensive beef in the world right now. And it's just amazing that in September we had higher exports this September than we did last September. It points towards the fact that we produce a quality of beef that is demanded in many markets across the world, and we don't want to be known as the guy that just produces hamburger. Again, our major import sources: Australia, that's mainly lean grinding beef. Canada would be essentially importing the same type of beef that we produce. And there's some issues that people say, oh, well, why are we importing beef from Canada? Well, a lot of those cattle came from the United States and went into Canada and were fed, and then we need to do business with our neighbors. And then we've got New Zealand and Brazil and Mexico that still play in that game. I need to look into a little bit more on why imports from New Zealand have declined the past couple of months. But the fact of pulling from Australia, we're going to continue to pull from that area more so. Exports, again, we still have the major players there in Japan and South Korea, essentially no difference in them in September. China we're still going strong with China from the President Trump's first administration, and Mexico and Canada still in there. This is the bottom line of wholesale beef. Sitting around a little over $3, $3.10, $3.15. For wholesale beef. And so when you think about a carcass, a 900-pound carcass, which most of the carcasses now, like I said, the steer carcasses are, I think 948 pounds is what they averaged last week. I think it was 948. And so if you just call it 900 and times 3, we're talking about $2,800 or so for a carcass is what its value is at the wholesale level. And when you go back and you think about what the packer is paying, $1.80 something for a 1,400 to 1,500 pound animal, they're not making much money on these carcasses right now. So the packers being squeezed pretty well, pretty tight. They're trying to manage slaughter levels, and they've been doing that for several months now. So that is one reason why we have heavier carcasses is because they're kind of holding it back. At the same time, that's not a bad thing because when we have fewer cattle, uh, we might as well grow them bigger. And the packer's not making a whole lot of money. And when you're not making a whole lot of money or you're losing money, you just kind of slow things down to try to control that production of in some form or fashion. Uh, but yeah, if you crunch the numbers on this, the Packers just not benefiting a whole lot from every animal killed. Uh, I think this is really important. You know, this if this was the middle of June, this would be important to Aaron's talk. But since this is the middle of November, this is not nearly as important to Aaron's talk about crops as it is just to pasture conditions, range conditions. I say that because this morning I actually went and when I was feeding cattle early this morning, I went to check on some ground where I had planted some fescue and some ryegrass over a month ago, and we got a little rain last week, and I now do have a little, some ryegrass and some fescue starting to come up where it has been drilled since the middle of October, and we just hadn't had enough moisture in any time during that. And so y'all realize that we still have some growing season left. I mean, there's a lot of people still trying to graze cattle this time of year, and we're still having good warm days, but we have not had much forage growth in many regions because there has been no moisture. The temperature has been appropriate and fair and favorable to forage growth, but soil moisture has not been adequate to promote it. And unfortunately, that covers a large portion of the country, much of which is grazing country. And if you think about the areas of Oklahoma or the Texas Panhandle or into Kansas where they try to graze wheat, there has not been much production of wheat this fall because of this same situation. And I know people think I'm foolish when I told them how dry it is where we are in Murray County, but I think Calvin or Kevin or anybody in this southern Middle Tennessee region, and you see that dark red or that red dot down here in southern Middle Tennessee on this map, and it really points to how bad it is in this region, even though it's very isolated. But there's a large portion of this country that's struggling with forage production, and we're not going to see heifer retention until a large portion of these regions get adequate moisture to promote forage production. Aaron's already talked about corn prices. Corn prices are extremely low relative to where they've been in the past year and over the 5-year average. Means it's pretty cheap to feed cattle. And so with that, just to show closeouts on cattle coming out of Kansas in September, just a little over, it's about $1.06, $1.07, something like that, to put on a pound of gain in the feedlot in Kansas. So fairly inexpensive. Typically we would think we would be doing it a lot cheaper on grass, but when you don't have grass and all you got is hay, sometimes that forces us to make the decision to go ahead and push animals on out and on off the farm because other people can feed them much cheaper than we can. This is November feeder cattle close as of yesterday at 246. And so when you consider where we said 550-pound steers were priced at in Tennessee relative to 246 for November, we're at a very strong positive basis on 550-pound calves. I would say many of those have already moved, but I'm sure there's still more out there that are going to be coming to the marketplace. And so very favorable for people to move those cattle in the current environment relative to previous years that we've experienced. This goes into January, just to give you an idea. We think that feeder cattle prices are going to slightly fall off. I say we, I'm saying traders. I'm not so sure that's going to be the case. I expect more of a steady price from here through the first couple or 3 months of 2025. I do think we'll start to see prices pick back up a little bit. We're not going to see, I don't know that we're going to see $3 eight weights by any stretch of the imagination, but I do think we're going to see some strength just because we are going to start realizing how few cattle there are available to go on feed. So here's kind of that forecast that where we think prices may be for those animals. And you can see where I have some positive movement there in April on the 7 to 8 weight steers in load lots. But with that,